Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's top stock picks, where two strategists each pick one of their favorite stocks to profile for the week. Mine is Cadence Design Systems. All right, first off, we're going to start with the chart of NVIDIA because Cadence is like, orbiting NVIDIA. It's like the moon to Earth, you could think of. So we have Cadence success is because of NVIDIA's success. It's funny, NVIDIA is making almost not new highs, but if it closed here, it would definitely be a new closing high. And it's funny because before the open, I saw a story. It said, let's see if I can find this. Oh, yeah. Before the open, Reuters reported NVIDIA down after report Google, Intel, Qualcomm plan to battle chip makers' AI dominance. And of course, it's higher. All right, so let's look at Cadence. And then I should review what Cadence does. Cadence is involved in electronic design automation and system design enablement. Basically, that's like the CAD/CAM software on steroids to design chips. And Jensen Huang loves this company. They've been partners for years. So here's Cadence. This move here, I was going to try and buy it at 300 last week, and I blinked. And I should have done it because Friday, March 15th, we're closing on just below 300. And then what comes Monday but NVIDIA GTC, which I knew was coming. And we'll see why Cadence jumped to new highs, up here to almost 330. But let's just review Cadence. Here is Zacks' number one rank. And we scroll down to the description. There's actually a good description here. Based in San Jose, leader in EDA, electronic design automation. Cadence likes to call their brand of system design enablement, they call it intelligent system design. And, they help chip manufacturers take integrated circuits, ICs, and then build modules and integrate their proprietary IP. So we'll look at the sales in a minute. Let's go to the NVIDIA newsroom to see what happened last week. So I always tell investors who follow me and we continue to buy NVIDIA, and I say you can still buy NVIDIA here under $1,000. I think you should because it's just going to keep going higher. The sales estimates for NVIDIA keep going higher, and that will drive sales estimates for Cadence. Just last week, next year's sales estimates for NVIDIA jumped $5 billion. So it's going to go to $150 billion this year, I think, and $200 billion next year. All right, you can watch Jensen Huang's GTC keynote right here. Just go to the NVIDIA newsroom, watch it. It was fantastic. A lot of mentions for Cadence. So here's what I'm going to do. I'm just going to search the newsroom and type in the name Cadence. We'll bring up, and look at this. There are 8 news stories, 8 press releases, because when NVIDIA does GTC, which stands for GPU Tech Conference, there's a flurry of press releases about everything they're doing. And so it's funny. So we'll look at all the ones dated March 18th would have been from GTC last week, and they mentioned Cadence. NVIDIA announces Omniverse Cloud APIs to power wave of industrial digital twin software. Remember, digital twins, that's what they did for BMW back in 2019 to help them simulate and build their new latest, next generation of robotic automated factories. Simulation is key here. That's what Cadence software allows Jensen Huang and NVIDIA to do, is to simulate a design and then test it before they send anything to the foundry or the fab. Another press release from March 18th mentioning Cadence. NVIDIA announces, we just read that one. Was there 2 of those? Looks like there have been 2 of those in there. Okay, next one. NVIDIA launches generative AI microservices for developers to create and deploy generative AI copilots across NVIDIA CUDA GPU installed base. CUDA, is Compute Unified Device Architecture. That's the integrated software with the hardware. And, the install base for NVIDIA is huge. The developers love it. Once they're in the NVIDIA ecosystem developing, They never want to leave it, and Jensen keeps giving them new tools. Another March 18th press release from NVIDIA mentioning Cadence. NVIDIA Healthcare launches generative AI microservices to advance drug discovery, med tech, and digital health. Maybe that second one up here wasn't a repeat. It might have had none. In any case, Cadence, and here's the other big one. NVIDIA launched or announced, we knew it was coming, their latest chip. It's going to be the B200 Blackwell, named after an African-American computer scientist. And Jensen loves to do that, name stuff after unsung American technical heroes. Like Grace Hopper was a female admiral in the Navy. So Blackwell platform arrives to power a new era of computing. It's orders of magnitude faster, and it's not going to be that much more expensive. Jensen threw out 30 to 40,000, but I think he's sort of lowballing. He's going to surprise, and it's going to be like 43 to 48,000 for the chip because the demand is so high. So this is why Cadence popped like it did last week, because it was mentioned in so many partnerships with NVIDIA. All right, let's look at the sales real quick. So if we go back on the left-hand menu here, we're on the quote page. We want to go to detailed earnings estimates, because this is the Zacks detailed estimates page. Now, Cadence is not cheap, right? It's an $88 billion market cap and just cruising into $5 billion in sales. It could break $5 billion this year, but definitely next year. Only growing at 12%. So that means it's trading 17.5 times earnings. But, with NVIDIA consistently trading 18 to 20 times, sales times sales, NVIDIA is trading 18 to 20 times sales, then Cadence can also maintain this, what I would say is a 15 to 20 multiple as well, just as the satellite of NVIDIA. So that's the way you want to look at. The other thing I left out is that Cadence is part of a duopoly. The only other company that does anything on the level that Cadence does in terms of EDA or SDE is Synopsys. And that's why these companies can command these kinds of multiples. I hope that was informative. Keep an eye on both Cadence and NVIDIA. Next up is Shiraz with his top pick.
Thanks, Cooker. My pick is Caterpillar. And those of you that follow the stock know that Caterpillar has been a stellar performer lately. My thesis on Caterpillar is that despite the stock's impressive gains in the recent past, over the past year or so, there's still plenty of upside, and I'll explain why that's the case. It's the business tailwinds as well as valuation. So I have a couple of slides I want to share with you here. You can see the first one, obviously, just shows how the performance stacks up relative to the industrials as well as the market as a whole. This is 1 year performance. This is the dollar price, $3.57 as of yesterday's close to its 52-week high. You could see this is a 5-year chart. This is the COVID recession, and you could see this stock has really broken out. And this is the valuation question. So here we're looking at Caterpillar, a 10-year history on a forward 12-month consensus EPS basis. And this is the Zacks consensus EPS, 16.6 times right now. In this 10-year span, the high has been 32.6, the low has been 9.1, the median is 16.5. So you could say that it's trading at its 10-year median. But given the momentum on the underlying business front, the combination of secular and cyclical tailwinds, I believe there is this median valuation level represents an attractive entry point, despite the stock's impressive gains. Here I'm showing the same valuation multiple, but relative to the S&P 500. As you could see, uh, since 2021, it's been trading at a discount to the market as a whole, not completely unusual, as you could see here. These cyclical companies may go up and above the market as a whole, but again, I have the 10-year history both for the stock as well as the index. And in the next slide, I'll show you what this discount represents. And this is the Caterpillar valuation multiple as a percentage of the market multiple. So this is currently about 77%. And at the bottom, there is the summary of it. This is, again, a 10-year history. It's currently trading at 77% of the market. Over the last 10 years, the high has been 190%, the low has been 53%. The median has been 92%. So this is another way of looking at the valuation. Current 77% of the S&P 500 multiple compares to a 10-year median of a little over 90%. This is the earnings outlook. The light blue over here represents the revisions trend for 2024. The red represents 2025. So you could see here the revisions trend turned negative both here for 24 as well as for 25, and then it has turned back up. And this is the actual data. So I have underlined the current consensus estimates. So this is 2126 for 2024, 2274 for 2025, and 2408. And at the bottom is the revenues. So what is the business case? The business case is that in the recent past, the last 3-4 years, there have been a variety of fiscal measures in the U.S. The Infrastructure Act, the Inflation Reduction Act, the CHIPS Act, the Ukraine war, and the result that had on the LNG build-out in the U.S. The sum total of these fiscal measures are expected to result in about $1.5 to $2 trillion in end market demand for the industrial group as a whole, and Caterpillar is smack in the middle as that positive demand trend. It's on the construction side, it's on the mining side, it's on the infrastructure side. And my thesis is that these current estimates that you're looking at for 2025 and 2026 are not the peak level of profitability for this company. There's a ton of positive revisions that you will see. These estimates will go through as we go through the second half of the year and beyond. This is also corroborated by what we are seeing in the PMIs, the U.S. as well as global, particularly the new order component of the PMIs. As you know, the ISM and PMIs have been in a contraction mode for a while, but the new order subcomponents have bottomed or close to bottom, which has historically been a very positive catalyst for Caterpillar. The Fed expected to start easing policy will be a net positive catalyst in the macro sense. Again, a positive for Caterpillar in the space as a whole. So all in all, the takeaway from my discourse here is that even though Caterpillar has had a pretty strong run, I'm very confident that the momentum is still with the stock, and the momentum is driven by a very good mix of fundamental and technical factors. That's it from us for this week. Please keep checking us out for interesting stock picks and investment ideas.